economic and institutional thought, World Bank 20, how 2020 classifying emerging market, and future direction based on the time available. I'll be discussing. Yeah. Anyway, this is a video. You all can see it. And anyway, this is the CEO of Advocate Institute, and he's talking about Sri Lankan economy and GDP. Of course, you all are familiar. You all have studied already business economics, I think. So, but anyway, I want you all to listen before I talk about emerging market.
Did you check the Central Bank 2024 annual review? The numbers looks amazing. Even one might think someone has massaged the numbers. Economic growth is at 5%, reserves are at 6.1 billion, inflation is coming down to 1.2%, and even the interest rate is coming down, exchange rate is appreciating. Our per capita GDP, $4,500. Can you believe that? The trick is here. Do you recall that there was a time we believed that money printing has nothing to do with inflation? Can you remember there was a time we thought that the exchange rate can be protected by imposing import controls? Can you remember at one point we believed that we have to even ban importing dal, turmeric, even some essential medicines to cut down imports and protect our reserves? But how come things got changed? While your exchange rate is appreciating, you have imports and your reserves are also growing. How come? That's what you call the economic policy or the power of economic policy. Of course, anyone can claim the credit as politicians, but we always need to understand, as long as we are on the right economic policy package, if we implement that, the numbers are going to look good. But it doesn't mean that anyone can misinterpret the numbers. The numbers may also, we have to be cautious when we are evaluating the numbers. For instance, when we look at the 5% economic growth, it doesn't mean that our economy is performing as good as in 2018, because we had 2 years of economic contraction, and because of the base effect, that we are getting the 5%. At the same time, 4,500 per capita GDP, that is basically our exchange, our rupee appreciated. As a result, when we convert the rupee size of the economy to dollars with the exchange rate appreciating, and also our population was not growing as we expected at the same time because of the economic crisis. Thanks to modern monetary theory, a lot of people left the country. So as a result, our population wasn't growing as we expected. So as a result, when we divide the numbers are looking good. But at the same time, we need to understand the economy is stabilizing, which you can see when you go to the shop. Goods and services are available. Somewhat normalcy is there compared to what we experienced in 2022. It is not about who is running the show. It is about what economic policies that we have to implement. And if we have the right policy package, protecting the value of our money, sound money, taking care of the poorest of the poor through a social safety net, making sure that the government do not intervene in business, making sure the government takes care of law and order, then our economy will always be on the right track, and at the same time the numbers will look good. But we should not over celebrate it, because the policy reforms has to happen. But this is a good start. The times ahead are challenging, but yet if we implement the right set of economic policies, Sri Lanka's economy will always prosper.
Yeah. So hope you would have seen that video, and I don't know whether you all read papers. Last week, someone has questioned in the social media whether Sri Lanka is richer than India, because when you take Indian per capita income is less. Because that you talking about $4,500, I don't know about the current one, right? So here he talk about a lot of wording or terms. Hope you all are familiar with that in economics or business economics. So I don't repeat. That is the purpose of this video. So later don't say that I brought some video, but the purpose is to show that how to summarize and analyze or evaluate an economy before you enter in the market. So that's the purpose of the video. So when the video recording, please watch 2-3 times and see and he used very attractive words, right? So that I don't know whether you all have different view, but so he's using very attractive word. So that as an adult, so you have to see that and how a person can analyze and summarize the evaluation of an economy before entering. What are the things to be considered? Okay, this we will be talking here. So that's the purpose of the video. The second video also, there is a shift of power, not the military, economic power, right? So I compared India and Sri Lanka. So you know Indian GDP is 4.1 trillion or 4.4 trillion. So the size-wise number 4 in the world. But compare per capita income is lesser than Sri Lanka. So you should know how to analyze and compare, right? So that's the purpose of the video. Now you can see here the second video. The person is talking about how the economic power shifting from west to east, particularly China, India, or particularly this Asia, right? So now you see this video. Please watch carefully. Don't expect me to again explain, but so watch the video. There's a lot of information available.
We don't need walls against goods coming from abroad. What we need is rather to let down our barriers, to open them up, and to take advantage of the opportunities for cooperation around the world.
The global economic power rankings are set to shift dramatically by 2031, with China expected to take the coveted top slot, closely followed by the United States. China is projected to secure the top spot as the largest economy, with an estimated GDP of $37.6 trillion. This would make China the world's leading economic powerhouse. The United States is set to maintain a strong position as the second largest economy, with a projected GDP of $35.4 trillion. According to a forecast published by the Center for Economics and Business Research, CEBR, the global economy is experiencing steady growth and is projected to surpass $100 trillion this year. This significant milestone signifies the increasing economic activity and prosperity worldwide. Furthermore, the forecast suggests that by 2035, the global GDP will double, reflecting the remarkable expansion of global economies. Global Trends 2030 report by the National Intelligence Council predicts that by 2030, no country, whether the US, China, or any other large country, will be a hegemonic power. However, on the economic chessboards, though, the tables will turn. Out of the top 5 economies in 2031, 3 will be located in Asia: China, India, and Japan. This shift highlights the increasing economic power concentrated in populous Asian countries. Europe, with Germany, the United Kingdom, France, and Italy, will maintain a strong presence in the top 10. Meanwhile, Brazil will be the sole representative from South America.
By 2030, China will have a GDP which will equal America. And by 2050, she'll have a GDP per capita about half of America.
China's ascendancy as the largest economic power was initially projected to occur by 2030. However, due to a faster-than-expected recovery in the U.S. in 2021 and China's challenges with their zero-COVID policies, the timeline for China to assume the top position has been delayed by approximately 2 years. China has managed to sustain positive GDP growth primarily due to the stability provided by domestic demand. This strategic focus on bolstering domestic demand was already a priority for China even before the pandemic.
India will grow at about 60% the pace of China. So today its GDP is about half, well, 1/3 really. But it's a very large country, 1 billion people, and the top layer are very capable people.
India, on the other hand, is set to secure the 3rd spot in terms of GDP, with a projected $10.8 trillion in 2031. Looking back, India's GDP stood at a mere $949 billion in 2006. However, recent years have witnessed remarkable growth, with its GDP more than tripling to reach $3.1 trillion in 2022. Over the next 15 years, it is expected to triple once again. Ritam Desai, Morgan Stanley's chief equity strategist for India, stated that, "We believe India is set to surpass Japan and Germany to become the world's third largest economy by 2027 and will have the third largest stock market by the end of this decade." Several factors contribute to India's impressive economic expansion. Firstly, India's economy had substantial room for improvement compared to other nations. Additionally, favorable demographics work in India's favor, with a youthful workforce and a median age that is 20 years younger than that of Japan, offers a competitive advantage. India's service industry has experienced significant growth and now accounts for around 55% of its GDP. Industries such as telecommunications, software, and IT generate a significant revenues within this sector. For example, India's IT sector alone contributes 10% to the country's GDP, attracting multinational companies like Intel, Google, Meta, Microsoft, and IBM. We make videos on current issues. Support us through your likes, share, and subscribe our channel as well.
Did you check the central...
This video would have given where China going to be in 2031. If you are an international business manager, you should know now how the world going to be or world economy going to be. Okay, you can predict something. So that's the purpose of the video, right? So earlier people were talking about China dependent on America. Now China has shifted that focus not on America. Okay, they are sending. You can see in Sri Lanka now, BYD vehicle is all over the Sri Lanka. Okay, so now they are focusing on rest of the world, not only America. So they don't want to be dependent. Of course, they sell still, but they don't want to depend. So China has focused, and there is a video going on this one social media. If you all are interested, you can see there's more than 3 people are discussing Sri Lankan, discussing Sri Lanka lack in policy planning and how China is becoming #1. So if you are interested, you can go to that one. Of course, this is a little bit older one, but there is a video I have seen on the Facebook. So you all can see it if you all are on the Facebook, if you all are interested. So I can't bring all, right? So now you as a business manager or an international business manager, you should plan which country or which part of the world going to be grow fast. I'm using a word, growth fast. So that is important. So the first video talking about Sri Lanka, right? So then what are the characters, what are the checklist you may have to do when you are evaluating an economy before entering this one. And we discussed about PEST, business environment or international business environment. So you have to go back to that particular lecture recording and view it, or maybe my PowerPoint. Okay, so I can't talk again, but I'm just referring to that lecture. Okay, we discussed about international business environment, PEST or PESTIL. Okay, so that very important for you all to discuss, to learn this. Okay, if you are learned already in the economics, no issue. Okay, so now I'm just putting some slide. What is economy? The large set of interrelated production, consumption, exchange activity, that type. So if you are listen carefully to the first video, now what you are talking is here about economy. Consumption, exchange activities, 8, determining how scarce resources are allocated. You guys learn it in your resources are scarce, right? Needs are unlimited. Okay, but then how do you allocate it? So you guys learn it in your basic economics when you are studying your business economics. I feel anyway, professor will be teaching that in detail the rest of the lectures. Okay, the economy is a system in which a people and organization produce, distribute, consume goods and services, right? So that's an economy. Okay, whether India or Sri Lanka, whether it's China or America. Okay, it involves use of resources such as land, that 4 M's, you know that. Okay, create wealth and satisfy people wants and needs. Economics can vary widely across that. Okay, study of economics helps. If you are really listening to the first video, now that same thing here, help us to understand how the individual, business and the government make decision about the level. Then he's talking about, is it correct to stop the import or not? And he's saying, according to his view, of course, I don't say he's right or wrong, I don't know, right? So cutting import is not a solution to manage the exchange control. Okay. So when the foreign direct investment and all, the lecturer will be talking you all the rest of the lectures. Okay. Study of economics help us to understand how individual, business, and governments make decisions about the allocation of resources and how these decisions impact society as a whole. So you should know about the economy, like video first. Second, talking about what is the trend. First video talking about how to analyze and summarize evaluation of economy. So now here I am talking about study of economics help us to understand how individual, businesses, government make decisions. Okay, so you should know that. So you are an investor. How do you go to India? Okay, I have seen yesterday LOLC has gone to India as well now. I am talking about LOLC finance. Okay, LOLC India finance or something. They have gone. Yesterday I have seen in the social media. They are inviting Sri Lankan chairman Nisara Nanekara, the local chairman of that particular company or local managing director inviting. They have said this one. So how India is becoming or China becoming a investment potential for a country. So even Sri Lankan company is the, I have told you all so many times, one of the largest microfinance, not a finance, microfinance company in the world. Okay, LOLs. So shifting a global economic power. So we talk about the second GD. Now you can see that. So in the second video talking about 2031, where China going to be, where India going to be number 3, America going to become number 2. So if you are depending on America, and you have to see what type of product you are sending, right? The growth is less than 3% in America. Okay, we'll be discussing that. But China about 5%, India 7 plus. Okay, so that economic growth is an important factor in deciding your business because the buying power going to be bigger. A new view of global economic. So what will be the global economic landscape like that? Some emerging markets. So we discussed about, I'm not going to discuss. F7, you all know that. Growing pool of high skill talent. So I told you all why iPhone came to China instead of setting a factory in America, because finding talent is easier in 1 month. Around 600 engineers, they can find it easily in China. If they had to do the same thing in US, they had to wait at least for 6 months to find 600 engineers. Okay. Don't say I find it's a simple thing. I don't know, because for me, I talk a little bit slow. So I can't stop again. I can walk, but I can't scroll. So if anything you are lost it, please stop me. Right. So I can't do anything. So that when it comes to that, it is coming. So increasingly global multinational, that you all know that. So yeah, that for you to read it. Okay. To prepare for this landscape, today business leaders need to take closer view which market called greater growth potential. So China, India, some other place, sometimes even Malaysia, Indonesia, right? So there are countries becoming more growth compared to Europe or US, right? Because that is why US, they are predicting US going to be the number 2 economy in the world by 2031. But then they are saying due to COVID and there is something, China got affected. But anyway, that would happen. Okay, because I told you all, China earlier depending on America, and now they are shifted the focus. Of course, they consider that as a, but they don't want to be dependent on America now. They are talking about, I think there are 3 Sri Lankan economists talking. There's a video going on. I don't know whether that one, so it's better you all to read it, watch that. It's good to help you all as a student or a business manager in international. That would, because 3 people are talking about 3 views where Sri Lanka make mistake and whereas China prepare a multi-level plus multi number of years. Okay, they prepare 20 years. Of course, then one advantage is one government. Of course, maybe a leader might change. The government policy doesn't change. It's a socialist or whatever that they are a mix. Okay, but in Sri Lanka and other countries, if the government change, sometimes policy change, that's the problem. But in China, they prepare 25 years plan, then every 5 years. But in Sri Lanka or other countries, there's a problem. That also they are talking about practicality for you to evaluate before you make investment. Okay, now I said India is good. Because last three regime, 5 years or 15 years, or that I think 12 years now, that Narendra Modi is the prime minister. Then everybody knows it is growing. It is the climate for business investment. But if the regime change, there may be a different. Okay, so that's why I'm talking. But China, it don't. Okay, there is a policy. Of course, might be a leader change. Anyway, if the leader also continuously the same at least for last 15 years, I think, if I remember correctly, but I don't know how many years, but more than. Okay. So to prepare this view landscape, today's business leader need to take closer view of the market for the greatest growth potential. So the growth potential is important because of buying power and the say from poverty they will come to a middle class to upper level, then they will come to rich. But if you take other country, there is a different. The growth rate is very, very low. Even population growth is very low. Anyway, I'm not going to talk about in my lecture. The population growth also very low. Okay. Then if you take baby wear or baby soap, you don't get much growth. So the companies which are producing soap for babies have to think about there. So that is why I don't know whether you will observe Johnson and Johnson, the baby, right? They are saying is good for mother, right? So they are saying within the one because mother used to the name to expand in the market. Okay, that is the marketing management you would have learning. If not, so they are going into that because when you are dealing with the American market, the growth rate is very low. Even Germany is almost a minus line, right? They are very, very close to zero, right? So then population theory, when you study, I don't know whether you're part of the syllabus, I'm not sure, right? So then you know, but Sri Lanka, very, very low even. Okay, we have a great population. Great means the older people. Okay, emerging global economies. 1980 to 90, the broad transition from political economy that we all know that. Okay, some of these changes continue, reshape and work, non-work life, much as early industrial revolution that you all know that industrial revolution, generation third, then now we are in the fourth generation. Okay, globalization made big smaller, right? Because the big world now becomes shrink and very close because of technology and other things. So globalization affect trade, finance, production. We discussed environmental production, global marketing. So I'm not talking new. I'm just putting points. What is emerging market, that one? So don't say that I'm jumping or that one. So we are discussed each chapter, global production, supply chain. Then we discuss about pest. So all these things now we are integrating in this subject. Okay. So I'm putting only point. Globalization made big world smaller, that you know that. Okay. We discussed in the first lectures. When we look at the world map, we need to think about how this global community of people and nation being systematically drawn closer together. So we discuss about culture. Of course, that was not my part of this one. I didn't have time to do that. So other than that, national differences, we discuss pest and all other things. Okay. So you know how to evaluate a country before you enter the market. Then we found there are two types of market, closed economy, mixed economy, and open economy and all there. But there is a 100% open economy, 100% closed, except North Korea. But even Russia is almost a mix, but close to towards a close, but not 100% closed. But only North Korea is a closed economy. So we go back to that lecture and refer as handout. So recording. Okay. Factors of superpower status. Okay. Now you should know physical size. That is, India is a huge size. China also huge. Russia is a bigger. Okay. Economic power. What is the growth? Now India becoming number 3. China becoming number 1. Okay. So economic power. Demographic power. So population 1.4 billion. China number 2. Okay. Political power. Right. Now they are expecting India to negotiate or do judgment. Okay. But India ignore it. They don't want to be any part of that. They are saying we are neutral. Listen to, instead I tell you all, please listen to the Foreign Minister of India. He's talking about very openly. He's arguing with Europe, right? He's telling you are not supposed to tell us what to do. We are now stand alone. We can do what we want, right? So that's the power coming. Okay, political power. military strength. They prepare their own strength. Okay, China has already done it, but India also doing their own military. This one. Cultural influence, and they are different. And physical resources. They are almost resources not dependent. Like Japan depend on resources. Of course, they are talent, but Japan depends. So that is why Japan going to be number 4 in the future. Okay. So these are the factors decide the superpower status of the economy. Physical size, geographical position, where is located, economic power, India, China, America, right? And capita income is high. GDP per capita is high because population less, still they are maintaining high this one. But India maintaining 4.3 billion, now they are saying 10 trillion in some 30 years or something. But still they are divided by 1.4 billion people. But the first video talking about why Sri Lanka went to $4,500 because a lot of people are migrated. Right? So you should know the figures, how to analyze, what are the factors contributing your data into information. So you should know that. Political power, I already explained. Military strength, I already explained. Cultural, physical resources. So these are the factors decide. So I told a second video saying shifting of economic power. Now you know China, India, and Japan. Okay, Japan has lack of resources. Of course, they depend on other, but they have a pool of talent, and they have made it already. This one, and they are gone like Toyota. All other these companies are made worldwide companies. Okay. Now we will talk about. You would have learned it in your economics anyway as a part. Industrialization nation refers specifically countries that have strong manufacturing base. Okay, so India also now becoming, but they are service oriented. You would have seen in that video, right? So if you are clearly listening to that, so that videos and the contents are related. At the same time, developed countries may include countries with a more diverse economy, including service based. So I have already told you. A developed economy means an economy, bracket country, with a high level economic activity characterized by high per capita income, okay, level of industrialization, so we discussed about, developed infrastructure, okay. Germany says they are developed their infrastructure, but one of the minister from India in a European Parliament or something you're talking about, we had done it last year, bigger than your size of the economy. Highway. So now you see, if when Germany says we have done it all over the country, but they are developing 1 year bigger than the entire Germany highway. So you see the size and the future growth. So they have done it 1 year such a way, right? So you know the size and the potentiality and the market, right? That is why the companies are coming to for globalization for two things: resources and market. So companies are coming to India for market. Mercedes-Benz, BMW, or Toyota, or whatever coming for market, not for resources. Of course, .com companies are coming for resources and the market as well. Technology advancement. So these are the factors as a checklist before deciding whether country is developed or developing. Okay, please remember these points. So you would have learned it in your economy, but I am summarizing for how to do a checklist before you go into the market or country. You do some sort of checklist at your desk level before going to the field. Okay, what is the capita income? Like I said, okay, if you take Singapore, more than $30,000, right? I don't know, but exactly it would be more even now. right? Because they have a population very less and over 250 billion or something their GDP. But Sri Lanka with the 22 million population, we have 85 billion US dollar our GDP. Okay. So there's this one. So you should know what is the market system. So this is a very short video. You can learn it in economics. Anyway, I want you to watch and listen carefully.
Let's dive into the market system and how it works. Imagine a market as a place where buyers and sellers meet to exchange goods and services. Now, resources are limited, so the market system uses supply and demand to allocate these scarce resources efficiently. When supply equals demand, we have what's called market equilibrium, the ideal balance where everyone's needs are met at the right price. But if demand exceeds supply, prices go up, and if supply exceeds demand, prices drop. This movement of prices helps bring the market back to equilibrium. So, in a market system, prices guide resources to where they're needed most, all without needing direct government intervention. Neat, right?
Well,
That's 1 minute of learning down.
Anyway,
See
I
you in the
want
next
you just
one.
to recall your memory. So now you should know what is market economy. Okay. So we discussed about closed economy, mixed economy, and open economy. Now we are talking about what is the market system. Okay. So now I'm going to talk about, we discussed about verse video, some characters, inflation, economic growth, GDP. Now this guy is comparing what is developed market versus emerging market. Okay. Please carefully watch this video. It's a short video.
There are two main classifications to understanding when investing in different countries. There are developed markets and there are emerging markets. What is a developed market, you ask? By definition, a developed market is a country that is mostly advanced in terms of its economy and capital market. The country must be high income and open to foreign ownership, allow for ease of capital movement, and have efficiency in their market institutions. As of 2021, Standard & Poor's classified 25 countries as developed markets. The United Kingdom, Hong Kong, Australia, and Japan are just to name a few. Developed markets are considered more stable markets, and it is important to note that although the U.S. economy is one of the biggest in the world, it hasn't been the fastest growing when compared to other markets. So what is an emerging market? An emerging market is a country characterized by rapid economic growth and development with lower per capita incomes and less mature capital markets than developed countries. A formula using a country's gross domestic product, or GDP, and per capita income is used to determine if a country is an emerging market. Some countries that are examples are Brazil, Russia, India, and China, also known as BRIC in the financial community. And like with every investment, there are benefits and risk involved with investing in emerging markets. Some advantages of emerging markets include high growth potential due to the rapid expansion of the economic environment, diversification, a good diversification tool for your investment portfolio because an economic downturn in one country can be offset by the growth in another country. And some risk of emerging markets include political risk. Emerging markets may have unstable, even volatile governments. Economic risk. These markets may often suffer from insufficient labor and raw materials. And lastly, currency risk, also referred to as exchange rate risk, arises from the change in price from one currency in relation to another. So in summary, understanding the differences in developed markets and emerging markets can help you to properly diversify your portfolio. And as always, it's a good idea to first understand your financial planning strategy and risk tolerance before investing.
Are you prepared for retirement? Schedule a free financial assessment with an experienced financial professional right online at purefinancial.com.
There are two main classifications.
What are the characters considered in evaluating which is developed market, which is emerging? Okay, I told earlier also China and India growing fast. So what is one of the checklist or characteristics of emerging market? Growth rate is one of the, and infrastructure and the risk high and the emerging market, because the systems are not in place. But when you take UK or Europe, the economic and financial systems are in place, banking are very good, so no issue. And but when you go to China or India, they are still in the development stage. So the risk there. One of the Sri Lankan company, a confectionery company, went into and burned the fingers and came. Okay, so they couldn't do anything. They couldn't recover what they invested. Not now, probably around 15, 20 years back. Okay, now India has changed. So you should know this, but I can't disclose. It's a private company. I can't disclose, but it was on the paper, but still I can't. It's an online recording, so I cannot do that. Okay, but I can tell. But so even one of the bank went to India couldn't, but commercial bank went into Bangladesh because they really done a reasonable report before they enter Bangladesh, right? So when commercial bank, someone asked, why did you go to India? They said, our policy is to say, we want to be a big fish in a small pond. So you should remember that. So that's the philosophy. They want to be a big fish. Okay, you see wherever the blue is visible compared with other Sri Lankan bank. Okay, so you should, that is the branding. So they don't want to go to India, become a tiny dot. So that is the policy of the company. So you should see that. Okay, now they might go in the future. So now they are established, they are doing well. So they can tell they might. But instead of things, they are going to the Middle East and other things. Okay, so that's how the investment decisions are made, entering, develop, or emerging market. So what I spoke here is already I have put it. Okay. The emerging market, unlike the developed counterpart, are countries transitioning to modern industrial economy. If you take India, now you name it, all three vaccines are available. Okay, they are come to that. You name it, pharmacies, pharmaceuticals are there. Okay, and they are regulated also. Okay, I think earlier they had 50 to 60% margin, and now they said no pharmaceutical company make a, because of their branding, they can't make supernormal profit. Okay, they made it. Even a multinational has to listen to them. Okay, we discussed in second lectures what is multinational company. Sometimes they dictate them, but India other way, right? Because of the size, they said you have to show the costing. Okay, so you have to show the costing, and you have to make this a profit. Okay, because the size is there. Even if you do it from morning to evening in Europe, you can sell so much a piece, 350 million, right, in US. But here you have 1.4 billion, right? So you don't need to make supernormal profit, make it available, affordable. So they make that regulation. Okay, so you can't make a supernormal profit. So that because of the so emerging market, unlike the developed, so when you enter, you can't do what you have done it in other countries. That you have to see because that regulation. I told you earlier what happened to Nestle. Okay, and the Nestle CEO said we are a #1 food company in the world. How can you say take out all the foods from all the Maggie from the supermarket outlets? So he was asking, and they insisted you had to take it, and they had to take it out. It was out of the market more than 3 to 6 months. Then, as a leadership change, they brought an Indian CEO who born in India but lived in other country, but he knows about Indian culture. So he came and negotiated with the Indian political. So we discussed up in the second lectures. So international business not easy. You should understand physical, practical. Okay, they brought an Indian, and he made a discussion with, and because he knows how to deal with Indian culture, right? And he was able to bring back the noodles, Maggi noodles into the supermarket plus grocery shop. So that is so you should know that emerging market, unlike developed counterpart, transition modern to industrial. Okay, so you can't do what you have done it in. So government can make a decision. They can say go, right? Like I said, maybe not now, maybe 10 years back, all these pharmaceutical companies, they came and started doing, and then local companies produced and said we can produce the same product at this price and allow us to do. So then they had to come down and they had to make. And so when you come to that one, because sometime earlier I would have told you all multinational can kill, but if you have a very strong local company, then they can make you to regularize. Like if you take KMS, baby ceremony, right? Beas baby. So how that? Because that there's a huge right from baby ceremony to Beas baby. So being a multinational, Lever Brothers has to fight with local manufacturer. So this is based on your know-how in innovation. So that first two lectures are interrelated. Okay. A developing economy refers to the economy with a relatively low per capita income. So you please understand, a developing economy refers to an economy with relatively low per capita income, okay, that undergoes a transformation process to increase the resources and source-wise population, right? So there is a transformation is happening. India, China, all happening, okay. Developing countries are the countries that have not seen any significant growth in their economy due to sticking to the traditional growth practices such as agriculture. Now they are changing the trend of the business. They were earlier traditionally agriculture based. Now they are looking to take IT, India, IT and the different other things. Okay, even manufacturing and export all. Okay, so they are becoming service. Not called industrialization yet. Of course, India has gone some little bit. Okay, so emerging market are the countries have witnessed massive economic growth. China above 5%, India 7+% growth. So the growth rate, GDP growth rate is high. Okay, I am continuously talking. Can you all hear me? Can you see my PowerPoint clearly?
Yes, sir.
Okay, thank you. So you can see emerging market are witness massive economic growth, not a normal. America 3 or less than 3. If you take Germany, very low, right? But China or India is 7+, 6.5, 7+, but China earlier it was 7+ and all. Now they are come to a such sort of different, I don't say saturation, but still they are 5+. That's the reason they are saying, predicting China will become #1 in 2031. Okay, so emerging market, one characteristic, the GDP growth rate is very high. So remember, but per capita income is less. Growth rate is high. So that way the buying power going to be high in the future. So that is why all these companies are coming. And again, India made it. They can buy a local rupee. No need to import. We import vehicles, but they buy from Indian rupee or rupiah. I don't know. I think Indian rupee, right? So newly industrialized countries like some other countries in Asia, ASEAN, okay, are emerging market whose economies have not yet reached the developed status, but in microeconomic sense, outpaced their developing countries. Okay, so these countries are above developing countries, but not reach the developed countries. So they are in the middle. So they call newly industrial countries. Okay, so then you have to see, then your product, when you are exporting or when you are entering to a new market, you have to see what type of your product, will it match? Can you sell that? Are you capable of satisfying that customer? Right? So now you have to see that. That is why this grouping of economy is important when you enter new market. And your product, what type of customer you serve, or what the product you have, and who is your customer? Can your product satisfy the customers? Then you have to see that if it is not matching, you have to go for another country. So here category developing country, what are the definition? Rate of growth, what I have talked is summarized. Okay. A developed economy is one already has become a high income country. Okay. And that continues to maintain its status despite downturn. On the other hand, development include that nations try to a process of, okay, what I have told is put in points here in a statement. So developed economy, developing economy. Okay. If you have any question, please ask. If not, I can go to the next slide. What is emerging market? A country that transitioning from low income, often pre-industrial, okay, I told you clearly, not an industrial country, service and another thing, economy toward modern industrial economy with a higher standard of living. Okay, they are now coming to the some standard living is becoming better. Okay, so reverse economy that experience considerable economic growth above 5. Okay, I think one of the definition is also, then we will come to that. Okay, growth possesses some but not all the characteristics of developed countries. Okay, growth is very high. Okay, if you take a developed country, growth rate is very low, but their per capita income is high, or GDP per capita is income high. Emerging markets are countries that transitioning from developing phase to the developed. They are towards developing. Okay. So they are not developed, but on the way towards developing. So I have put some definition here, so you can read it. Emerging economies how sees growth rate increase, the GDP, FDI flows are coming. I don't know whether you all can remember. 15 years back, every week $1 billion was coming to China as a foreign direct investment. Okay, you will be taught by professor in the latter subjects, latter lectures. So he is doing the foreign direct investment, FDI. So China was getting 52 billion average, not now, around 15 years back. That's the reason the development, investment, now they have become growth rate is 5. Okay. So if you do that one, the companies will come and invest. Okay. The growth is there, potential market growth there. So the India also getting the same, getting the benefit because 7.5 and population. So people are coming and investing like automakers, you name it. All the world famous brands are available in India. You can buy it in Indian rupee. So no need to pay. Of course, there are local taxes applicable, but that is like a normal buy and sell, but not to import. You don't need to deal with the custom. Unless you go for some brand not available in India, that is of course some what you call very rich people, they buy it, but that is they have to go through the different, like Sri Lanka, you get 300% tax. They also have that one, but that is not in available. But there is a very niche market or above a market like these famous owners and the CEOs might import for their prestige and other things. But normally you get all these Toyota or Range Rover all available, even Mercedes-Benz and BMW freely available in India. You can buy it. No need to even book it. Okay. These markets are highly competitive and play an important role in globalization. So they are making that. Because that people are coming, globalization is happening, investment happening. Emerging economy expand beyond agriculture. I told you all already. Because now they are moving. I am not saying they are they are avoiding. They are still continuing because they need. But they are making use of other industrial or service towards as well. That means diversifying their economy rather than depending on traditional agriculture, self-actualization like that. But self-dependent. Now they are, of course, they depend. Then they go for export and giving service to the world. So the globalization. Due to their rapid growth, like above 5%, investors often find such as market attractive because they can get a quick payback. So I'm using a word you would have learned in your accounts. Don't tell me that I didn't explain. Okay. So it is you would have learned about what is the payback. So because your return is high, then you can get quickly your payback. If you invest the $1 billion, you can get it in 4 years or 5 years instead of waiting 10 years in other countries. So the payback period is reduced. So the risk is less. But there's another way also. Some policies, security not available, all are there. Okay, exchange rate suddenly goes up like now Sri Lanka, exchange rate 331. Okay, we are not a part of what we call emerging, but like these developing countries, exchange rate is the vulnerable. Some examples of emerging markets are India, China, Brazil, Mexico, right? So these are the countries, one of the emerging countries. So emerging market economies. So emerging market economies are countries in the process of becoming industrial economies that we have discussed. So wherever I highlighted, please read it again. So I don't need to read. Economies are the developing nation becoming more engaged with the global. But these countries are open their business with rest of the world. Okay. So China, it was earlier closed like that, but now they started with America. Now, like I told you all, now they are not focusing on America or not depending, but they are focusing on rest of the world to reduce the risk of depending on US. Okay. And even they have started doing some business with India, right? Because they are rival, but both countries are looking. But Chinese products are cheaper. So people are like it and they are buying. Okay, these markets are attractive for foreign investment. So I have put clearly attract foreign investors due to the high return. I already told. Okay, and the payback is low. Payback is low means less number of years. Okay, this of course I am not going to read it, but for you all to get some understanding the background of how this pace of marketing was coined by economics earlier. Okay, the BRICS, Brazil, Russia, India and China. BRICS now of course BRICS S. Okay, so some emerging markets are South Korea also coming into that. Okay, Middle East and Africa is also becoming now as this one they call sub-Saharan. Okay, so that you will learn it in your economics later. Okay, sub-Saharan they call African countries because World Bank is doing a lot of projects. Okay, what are emerging market definition? I have put a small picture. So you can read it, and whatever I have discussed now in a one picture, it's not mine. Of course, it is somewhere. Emerging markets are those countries that are in the process of rapid, not a normal growth, rapid growth, economic development. Okay, or industrialization. Why is important? Emerging markets are contribute to the growth of the world economy because that they contribute to the world economy. Because the people are coming and investing, and then the world investments are going every year going up all, and investment is then worldwide. Okay, growth drivers. The key factors driving growth in emerging market favorable demographic because population and this one natural resources. India as China has the resources and the infrastructure developing. I said they are developed last year itself. The size of Germany highway. So even Germany may say we are done nicely, but 1 year they did it. So in for 10 years, they will be huge in India. Okay, risk. The risk associated with the investing in emerging markets are political. Because I told, except China, like India, luckily that 3 times this current regime is there. But if not, there is a change because not like Europe or US. Not much of the foreign policy change, except this Donald Trump is making mess up at all. But other than that, hello. Sorry. I will 5 minutes to cover. So risk associated with this one, investing emerging market and all other things. The investment opportunities are very high. Like I told you earlier, investments in the emerging market include access, new market, high return. I told high return or less payback. The less pay number of years, the payback, diversify investment portfolio because then you can diversify. Sectors, key sectors that offer growth potential in emerging market include technology. Like I told you all, I don't know whether you have $15 billion invested by, they are going to invest by Google, okay, for a AI lab or something, they or backbone or something they are investing in India, okay. So consumer goods now, Nestle and other all these India, okay. Energy, okay, Mitsubishi and there are other Japanese companies, a huge amount of investment by Japanese companies in India, energy, right? Healthcare, I told you all, you name it, all the healthcare companies are in India. China as well. Okay. From there they export because the easy to one we discuss about global production and supply chain. The transport costs sending to Sri Lanka is easier than sending from US. Earlier we were during the COVID we got a lot of item from COVID vaccine from India. Of course we had an issue later. Then we got China palm or something from China latter part. Okay. So now these see what are the emerging market. There are 6 points. So what I discussed, I have put in a one slide. So please remember the characteristics of emerging market. Any question? Hello? Can you see and hear me very well? Someone has a response?
Yes, sir.
Yeah. Okay, good. So now we discuss about currency. So I am putting a points here. Okay. So I'm not going to discuss the pay. Okay. So what I told that in the picture, now I have put in a what are things? Market volatility very high. Growth and investment potential is very high. Okay, volatility high, this is a risk. High rates of economic growth is high. Income per capita is growing, right? So these are the positive factors, except the risk. The investors coming into the emerging market. Okay. So we have discussed about entry strategy later, but now you should know, because I said I am mixing up because of your number of syllabus, number of lectures less. So otherwise I'll talk about one day investment, then this one. Here I have been given less lectures, less numbers. So with that I am merging and reduce the content. Okay. So here we are talking about all three in one. Okay. So now the characteristics of emerging market. High economic potential. Resources abundant. India, China, you get Indonesia, right? Even Sri Lankan companies are invested a lot on plantation, right? Market size, India and China, right? 1.1 billion plus 1.4 billion. I have told automakers are coming there because rather than importing, and they produce. Cultural exchange volatility, okay, that is there. Language and diversity, that I told. That may be the one reason MBS sold their product to Reliance. So I can't repeat again, I can only just mention. So I have explained clearly, okay, earlier. Don't say that I didn't explain, I am fast. I have discussed very fast. I am only now telling MBS example. MBS had their own product, they developed and sold it. They couldn't go beyond more than 4 showroom. Maybe one cultural language diversity, right? So it's not having easy, and the size and the even transportation and all difficult. So they sold it to Reliance Retail. Environmental social consideration. Accepts to the capital. Sometimes difficult. Okay. Regulatory political risk. Infrastructure development. Demographic advantage. Okay. So these are the things below listed in a nutshell, defining characteristics of emerging market from investor point of view. So this has, someone has to see this. What is the economic growth? Potential. High or growth? Stable. Okay. What are the resources available? Like I said earlier, why iPhone went into China? Because abundant engineers. That is 600 engineers, they can find it in 1 month. They can't find it in the same way in America. If they had to do the show, they had to wait for at least 6 months. Right? So resources abundant. So this is there's a video. So I'm not going to do that one. So I'll good.
Hello everyone.
Okay. Now it's all the 2023. Now you can see in 2023, the world economy was 105 trillion. Okay. That time US was 26, China was 19. So like that, so I'm going to list it here. But 1970, it was 3 trillion. So now you can see the difference. How economy is growing because of the globalization. Okay, in a one box, one slide, I have put everything. Okay, top 10 companies, India was 5. Now they are saying 2031, India will become number 3. Okay, and US become number 2. That according to the video. Of course, there may be a different, sometime it can get delayed. Okay, but anyway, Donald Trump is destroying or damaging the economic growth and all the things. So China might become number 1 probably in 2031. Okay, they said 37 trillion or something. Okay, that video says. So Japan, India is going to take over, overtake become number 3, Japan. Okay, so Germany number 4, something. Okay, so now 1970 it was 3 trillion. In 30 time it become in 2023. So 20 billion it will say as a 180 trillion. So now you as a professional business manager or international business manager, you should know where this growth is going to happen from 105 to 180. What type of product or what type of consumer goods? So like I said, technology. So now you have to see where do you invest? What is your product or you have developed? So we discuss about second lectures innovation. So where to innovate? So you have to innovate based on this, which country you are working. So can you do that one? So your capacity. So that's the purpose of this slide. Okay. So 2050, they are going to be 180 trillion. Okay. So now you should know where that 180 trillion, how is going to come? Which country going to come to continue? So I have already told, one is China, second is America, other one is India. Okay, I have given a lot of examples why brands are moving toward Asia or East. Okay, that I have explained. So this is about 2025. Okay, 26 forecast I don't have. Okay, now you can see 26. Okay, same way, but of course that picture is different, but same source, different. 115 trillion. So 10 trillion has gone up. It was 105, 115 trillion. So I am not going to read it here. So it is for you to understand about the world economy. Okay, like you wrote your assignment to the CEO chairman, he doesn't know anything. So you as an investment manager, you should give this background when you are writing up. Okay, if you ask today, okay, we want to go to the country, so you have to say we were 105 trillion last year, 2020, 30, 25, 20, 115, 26, what is the estimate? 27, 30 was how much? Which country going to be? Then a normal layman chairman will understand, and they will ask question you, okay, then which country we are going? Then you have to do further analysis. Okay, and where is our product matching? Or do we have a product, or do we have to even develop? So that's why we discuss about innovation. Okay, these subjects are interrelated. Now we are talking about marketing of international business. Okay, so now with that all note, I'm coming to that one. The UNCTAD and IMF has grouped this world economy into different categories. So you should know, because then only you can understand their report. IMF, they are categorizing advanced economies. United States, Euro area, Germany, France, Italy, Spain, United States. So Japan and all. So they are separate. Japan they are taking separately. United Kingdom, because United Kingdom, UK is not part of the Euro now. They are talking about Canada also separate, because it's a very growth weaker country. Other advanced countries. Okay. Then they are talking about emerging market. So we discuss about developing Asia, okay, China, India, Asia, emerging developing Europe. Even Europe itself, they are not all developed countries, even though 21 countries, I think, if I remember rightly, but all 21 are not developed. Remember that. Russia is a Europe, but not in the European Union. Remember that. Russia in Europe, but not a European Union. So you should know that geographical this one. Middle East and Central Asia, Saudi Arabia, Saharan, I told you all, that is Africa and other things, they call it Sub-Saharan, Nigeria, South Africa. So this is where India suggested us to be integrated at low income development. That is why we got 2 billion during the COVID IMF loan. Okay, we were given, and now every installment we are getting it. Right? We are on the memorandum or something. Okay, we were earlier under developing, but we are after that crisis, and we were defaulted our payment. We were degraded to low income developing countries. Okay, of course now last year that I got to the video, now we are grown up. I think IMF also saying every day meeting after the review meeting, they are happy with that progress and all. That is, if you are reading papers and news observing, then you know what I am talking. Otherwise, it's a news to you all when I talk. That I can't go beyond. Okay, UNCTAD is categorizing the world economy into developed economies, Europe, North America, developing economies, Africa, Asia, Latin American countries, and transition. The Sri Lanka is all comes under transition. So this is how you should know this grouping for your report reading and categorizing before you enter the market, because you can't go all the countries. Okay, so when shall we go to Europe? So in Europe, then whether you are going to European Union or Europe, North America, right? That is US and all these countries. Okay, developing economies, Africa, Asia, Latin America, Asia, India, China, and other things. So these global groupings are there, different. Okay, I'm not going to discuss, so you can understand that. This is emerging market picture. I'm not going to explain, but for you to just how these emerging markets are there. There are 10 big emerging markets available, I think, now as per the categorization. Of course, some people say 20 companies, some people say 24. Oh, that is all opinion based on the different checklist. Okay. Remember, this is on alphabetical order, not on a size or not a ranking. Okay. So you don't get confused. This Argentina is not on number 1. Okay. So on an alphabetical order, these are the big emerging market 10. So if you want to be an investor, you have to look for these countries. Okay. If your product is matching to that country, so that's why I said now LOLC Finance entered recently to India. Earlier, they were in other countries, Bangladesh, sorry, they were in Indonesia, they were in Africa, right? Even South Korea, sorry, yeah, South Korea they were, right? Now they are going to India. So this is one of the emerging market. India is in the list. So now you can use this one of the list and see what is the opportunity there. Do you have a product to match that opportunity? If not, you have to innovate. That's the reason we discuss about innovation. Okay. Top emerging markets are there. Some other country alphabetical order. Egypt, Iran, Nigeria, Pakistan, Russia, Saudi. So these are also other emerging markets. So there are 18 countries in the world. Somebody saying these are emerging countries. But some other institutions say 24. We'll discuss about. Something say 20. World Bank says something else. So there are, it's all opinion based. Like I said, India suggested us to be degraded and that $2 billion during the COVID problem. Okay, prices. So that is sometimes if they are not this one, they degrade or upgrade based on the growth and the figures available. Am I fast? Can you follow me or still you all have a problem? Hello?
No, sir, no, continue.
Okay.
Can follow.
Yeah, just to make refresh today's last class, the last means the concluding class. Can everyone, there are 45 students. I want to see all 45 are there or not. Please on your online video and introduce yourself. It's a must. And other institution, I have been given a note today. I can't tell the name. If they are not, I know it is a different, the attendance is not added. Okay. So at least as adults, can you talk to me? 1 minute. Oh, 1 second. Oh, 1 second. Only a video. There are 46. So if you include me, 45. Yeah, 44. 46 or 45 students are there. Can you do it? Who is the representative? So as a leader, can you do it quickly first? Hello. Because if it is a physical class, I see a people, and if it is even I do, but here, so can you all do it? Or you want to be hiding? Hello. Can you all hear me?
Yes, sir.
Yes, sir.
Yeah. So please on your video, introduce yourself.
May I introduce myself, sir?
1 minute. I can't see you.
Hello.
I can't see
hear
you.
me, sir? Can you see me, sir?
1 minute. I'll show the meeting in the done. Okay. Yeah. Okay. Now I can. Yeah.
Okay. I'm Mirandi Jayasinghe. I work.
Yeah. I'm watching.
Can you hear me?
Yeah, I can hear.
Okay. I'm Mirandi Jayasinghe. I work for Sri Lanka Insurance Corporation head office.
Okay.
And I work there as an executive officer.
Okay. What did you learn from me?
I learn about the international, how a company become an international and become an international business.
Okay, thank you. Okay, that's enough.
You're welcome,
Okay.
sir. Thank you.
Okay, you're welcome. Yeah. Yeah, somebody else. It is not a must if you like it. Okay. I want to at least see your faces. I had told you all like I can tell, no? Otherwise, I don't know when I see you on the road. Right? Yeah, quickly, talk. If you all are not willing, I will go for my lectures. It's not a must. But other institution is a must. They should own all 3 hours. But here anyway, it is a university system. I don't want to go. But the other institution is a local institution is a must. And even I got a note today. If they are not on the video for 3 hours, their attendance not counted. Anyway, I am not involved with the administration here. But at least I can see your faces. Then I can say I taught you right now. I teach you.
Sir?
Yeah.
Can you hear me, sir?
Yeah, I can hear you and see you. Yeah.
Okay. Sir, I'm Kumudini Irgal Bandara. My number is 59. And
Yeah.
I'm working as the Assistant Director of Sri Lanka Export Development Board.
That's a good.
Actually,
Okay.
yeah,
Yeah.
this following this course, actually, I obtained greater knowledge about how internationalization happen with the industries and how the companies connect to international market because it's a long process and it's a challenge for most of companies and even for us as the officers.
Top 10 big
Because this is
emerging
the old
markets of the
data.
world in
So anyway, that
2020.
I'm not going to do
In
that.
today's global economy.
I'm skipping that. With the 2020, now we are 2026, so I can't get it. But anyway, data not changed. Okay.
Hello.
The real GDP growth, you can see here, I have been talking to you all. 2019, United States 3.8%. But when you come to India, South Korea, and China, how that you can see that 73 times, and India 14 times, South Korea 28 times. Okay, Brazil 5 times. So this is the economic growth has gone from 1969 to 2019. So 50 years. Okay. So that 50 years, America has grown 3 times. China has grown 73 times. So when you are an investor there, you know how you would get your return. Hope you will understand what I am talking. If not, please stop me, then I can explain again. So that's the reason these countries are named as emerging market. Okay. China has grown 73 times in 50 years. South Korea has grown 28 times. India 14 times. Of course, now India is growing faster than now to after 70. It's all data, but I just show you an example how these countries have been behaving in the economic growth last number of years. Okay, a global economy projected, so that's these are the data you need it before you make your entry into an economy. Okay, so that what I talk here. Okay, so these are some old data, so don't worry about. But I just to show you how the growth is happening. Because 2008 there was a financial crisis in the worldwide, right? So that is why that all the countries growth went down minus. Okay, so 2008 there was a financial crisis. Okay. Okay. So this is some emerging countries according to Morgan Stanley. So that we'll discuss. I will give a 10 minutes break. You have a tea or whatever it, and come by 2:40. I'll be available. Emerging market, according to Morgan Stanley, they are saying in the world, 24 developing countries qualify as a emerging market. That is Brazil, Chile, China, Cambodia, and Mexico. But they are categorized into 3. Okay, so there are different organizations. World Bank, Stanley, this is one of the financial institutions. They do stock market evaluation and other things, and consulting company. So capital market, emerging market, they are saying 24 countries in the world. So now you can see this classification or categorization is an opinion. Okay, they justify their opinion. Okay, so you should remember that. Okay, this is the World Bank. Developed market, the countries are there, and emerging market countries are there. Okay, so no need to memorize or anything, just slides for you all to understand. Asia Pacific, emerging market economies, Americas, emerging market, this one, and Asia Pacific. Okay. So emerging market group, anyway, I am not going to put a videos. You don't like it anyway. How emerging market economies are classified? Level of income, so that means per capita income, whether it's a GDP per capita, quality of financial system, how the financial systems are available, banking and other, how quick you can get this one. The economic growth rate, like I said, India, China 5% above, India 6 and 7 like that. So the high growth potential is considered. For example, IMF 23 countries. IMF, now we are very familiar with IMF. IMF classified 23, Morgan Stanley 24 countries. So that 24 countries I have already discussed. Standard & Poor's, that S&P, normally banking sector people know. There's always, if you go for it and they immediately ask the bank to, you to get S&P report if you are dealing with a customer other countries, export or something, and they immediately get Standard & Poor's report. Okay, it's called Standard & Poor's, the international rating agency. They are saying there are 23 countries they can name as or classify as emerging markets. Now, Dow Jones 22 countries. So now you can see this categorization is an opinion based on their evaluation. They say these are the factors, and these countries can be classified as emerging market. Okay, then investors will go, and then you have to do a particular country further research before you enter into the market as emerging market. Okay, these are the IMF, World Bank, and all these things are there. The World Bank I'm going to discuss in a separate slide. Okay, so there are school of thoughts on emerging market. Like you study in a school of thought on marketing, you have thought on school of thought on management, right? Leadership and all other things. There are school of thoughts. Okay, on these international business also, emerging market, there are a school of thought. The term emerging market was used in 1900 by Antonio, that is a World Bank economist. Okay, describe the rapidly growing economies as so-called third world countries. Okay, these countries former colonies that you all know that USA, Western and European or the communist bloc, Russia, China, Cuba, right? You all know that. In different historical period, different economies have been described as emerging, since its terms suggest phase through which economy should go through on its way develop to industrial economy. So we discussed in the previous slide, early part of the discussion. Okay. Any question, please stop me. Okay, I'm going with as I discussed, I'm going with that. These emerging markets have been one of the key for this one research in 2000. Okay, this started recently, only 26 years in this research, and this based on the research and article scholars has summarized. This is an economist, World Bank economist, he classified. Okay, school of thought on the emerging market, for example, Hong Kong, Singapore, South Korea, all are Asian tigers. They also, you all know these names because you all have learned only economics already. So that's why I'm not discussing. Due to the growing interest in the emerging market during 2000, that economies, BRIC, it was 4 countries named as BRIC, first letter of the country, Brazil, Russia, India, China. So the BRIC, now it's called BRIC-S. Mint, Mexico, Indonesia, Nigeria, Turkey. So these are other countries categorized and shortlisted or abbreviated as Mint. Next level, that is now the Asia, right? Bangladesh, Egypt, Indonesia, Iran, South Korea, Mexico, Nigeria, all they call next level countries. Okay. So started to be the emphasizing important economic promise 2050. Based on the economy and analyzing World Bank report, IMF and all, they found these countries are growing faster compared with Europe and US. So then they thought it's an emerging market, opportunity for growth. World Bank advice, so emerging market, or Stanley, the Morgan Stanley and all, the advice multinational to go and invest because these countries are growing fast, then your return will be high. So companies went. 2 different directions of school of thought. There are 2 school of thoughts. We discussed about despite relatively short history, the emerging the 20 years, right? Okay. So the 2 school of thoughts are economic school of thought, institutional thought. Okay. So economic school of thought and institutional, IMF and all, and other one economic school of thought. So do you all know what is school of thoughts? I assume and because you would have learned it. If not, please stop me and ask. Do you know what you mean by school of thought? Please respond. I assume that you all should have learned it in your management or leadership and other things. You would have learned it school of thought. Do you know what you mean by school of thought?
It's a different way of interpreting based on the scholars and the time period it is developed in.
Tell me again. Yeah,
So
please
it's a
repeat
different
it.
way of it's a different way of interpreting based on the academic scholars involved in the time period. It's the way of perceiving the theory and such.
Yeah, that's okay, but it is not a school of thoughts. It is not a formal organization. Informally, group of people support this one and come out all some thoughts. Like if you take a leadership theory or if you take a management theory, one person come out and they come and this one. So it's school of thoughts. Okay, so it is not a formal organization, but say a scholar like say last week I put Michael Porter. Someone like that theory and they agree, then they come follow and they develop further, right? So it is called informal organization, not a formal organization. So they follow the group of people, scholars support. So one is economic school of thought, other one institutional like IMF, World Bank, and also institutional thought. Okay, that's the two type of thought. They analyze the theoretical concept of the economic and institutional school thought on emerging market points to key element type 4, typical of 4. Okay. So economic school of thought, other one is on institutional school, that IMF, World Bank, all other things. Economic school of thought says one of the members of economic school of thought is that one who with this associate and define rapid economic development. And he said if a country is growing faster than normal, that means abnormal growth. India has been growing over 6%. China has been growing 6-7%, now 5% above. But the world is growing less than 2-3. So it's an abnormal growth. So rapid growth. Government politically favors economic. So the government in the process of liberalizing, like India has been liberalizing, but China has been doing it. So if there is an observation or if you can see there is a liberalization happening, though this economy said that countries are on the way and they classify that country as emerging economy. Is it clear? So this is the second point. This definition significantly relies on interpretation of the emerging market presented by that one. So there was somebody here, 5% above. So they said if the country is growing above 5%, it is abnormal or the rapid. So rapid means they classify if the economic growth is more than 5%, that is one of the sign of emerging market. Is it clear? And 2000 same thing, the definition update. So this is economics of school. They said if rapid growth, government policy is relaxing, then that there's a sign that country can be classified as emerging market. School of thought on economic school of thought, okay, nominated by economic growth and this one liberalization. So I have discussed, so you can read it there, and I don't know, no need to repeat and again read it, right? So institutional thought, IMF and World Bank and all. Okay. Second group of theories, that one they thought that two gentlemen said claim that emerging market offer prospect for significant economic growth. There's a prospect that you can see. They also the same line, but little bit different, right? As they develop necessity institutional foundations stimulate trade, but with a certain institutional gaps that may cause the market failure. So they said they again causing also, right? Of course, there's a growth, but still there should be a failure. So you have to be cautious about that. Furthermore, that Peng and one of the book writer, I have recommended also for you, I think. Markets characterize that so-called institutional transition from central planning to increasing to. So that means liberalization of economy. There's a sign of liberalization. So this way, people said that institutional run, that country can be classified as emerging market economy. Third, the other gentleman, he said definition and said the institutional framework, emerging market differ generally from those developed market. They are completely different from developed market. Developed market is very structured and all other things. Okay. So this institutional thought dominated by institutional elements, namely different terms of digital gap, level of uncertainty and the risk. Risk is there, right? Culture, because Western culture and Eastern culture different. The transitional institutions are transition. This is a basic characteristic. Okay, I have a list you can identify, but is the two thoughts I have compared now. Okay, hope you all know what is World Bank. I have given a slide. What is World Bank and all. Okay. According to World Bank, in order to 2020, declared emerging market, it must meet the following conditions. Per capita income, which is the most important. So criteria for this one. So for rapid growth, right? And World Bank said, if a country is growing faster, per capita income is very high, then okay. Accelerated economic growth in 2019, 3% above. If less than this, then okay, right? Egypt, Poland, and 6.7. So they categorize these are the checklist. Highly eligibility to a consequence of the first two characteristic, sensitive to exchange and all. Okay. Growth potential is for investment capital. So this is the World Bank definition of emerging market. 2020, 2019, they started this definition. It's still they are following. So Germany was 3%. Poland 6%. China, Vietnam between. So I gave you all a video also on third or fourth lectures about Vietnam. Then, but you all didn't like. I removed now. So 6 to 7%. China, India, right? So when you have a rapid growth, so you see all these institutions going with a commonality but different opinion. So what is emerging market is rapid growth. There's a liberalization, potential for investment return. So that's a simple thing. If we have three, compare with Western market or the developed market is maximum 3%, right? So here, Malaysia 4%, Vietnam and China 6, 7, India is higher than that, 7.5 one time. Okay. Definition of emerging market now, Morgan Stanley says if it is per capita income is more than 10,000. So Sri Lanka is not comes under that. We have 4,500. First video you have to remember now. Okay. Sri Lanka is not a emerging market yet. That's why we are not getting foreign direct investment as we planned or whatever it be or everything they do promotion. But still, they are not coming. Well, second, we don't have a market size because we are 21 or 22 million. So Morgan Stanley, one of this person, they are saying emerging market per capita income should be 10,000, less than 10,000. Okay. Unstable, responsible macroeconomic policies. So the policies are changed. So then multinational can play around with that because they are huge, right? Insufficient shares on stock. So now Sri Lanka stock shares are very low. So that means there is a possibility. World Trade Organization develop and developing self-selection criteria 140-50 countries. Then they said there are 149 countries, 50 countries are designated at least developed. Okay. UN World Bank is based on score Human Resource Development Index. So that they are going for a different index. Life expectancy, that how old you can live. Okay. They go with that demography. Adult literacy. Okay. Writing and reading and all other things. GDP better than GNI, Profit National Index. So these are the things, different opinion with the different things. So emerging market is an opinion classification. So simply you have to understand that. But different institutions, different economies, there are two schools of thought. One is school of economic school of thought, institutional school of thought. That you should know that. So there are two definitions. Now we are coming to the final definition, probably good for your exam. An emerging market can't be classified and defined as a society in transition from dictatorship to free market oriented economy. So now India, China is moving toward mixed economy. So we discussed in the best environment of international business. So now you see the earlier lectures were related to today's lecture. So here, society transitioning from dictatorship to free market. That means from mixed market, free market like that. We discuss about how moving from left to right. Okay. So if the country is moving from dictatorship to market orientation, that we call demography and all other demographic transition like that all. Okay. With the increasing economic freedom. Okay. Gradual integration with the global market. So then they are allowing foreigners to come and invest like that. Okay. Improving standard of living. Okay. Then you know the standard of living index, they are world one like that. Doing business in the world, and there are books, index, and Sri Lanka is 90 or something now. So this is these two guys develop this definition. Okay. So definition 2, emerging market economy is one of that one. Emerging market economy typically features that one. So they are processing the industrializing emerging market. So now it's one. So there are two definitions now. You can see this. Okay, I'm not going to explain. So we discussed 5 or 6 institution, economic and institutional. If the gross national interest is the income is per capita is less than 10,000, that country named as emerging market. High birth rate. Why birth rate? That's why I said Johnson and Johnson is focusing mothers also the same so. Okay, because then they know in the Western countries birth rate is less, but in the Eastern and Asia the birth rate is high. So they are saying if the birth rate is high, then growth for market, right? Low education, then there is a chance for education. Underdeveloped infrastructure, then there is a position of potential for infrastructure development. Then the government will invest. Then the growth will be there. Several language and so then because of that there is a business. Close family ties. Less women work in place. So then there's an option for people to come. Like that's the reason these international garment factories came to Sri Lanka, because earlier women participation in Sri Lanka is less. Now of course, guide. Okay, cultural issues and unstable government. So these are the things characteristics of emerging market. Emerging academic definition is published in that one. They are saying where they're starting. Okay. Emerging market country is a society in transition from dictatorship to free market. We discussed. Now they are combining all these words into one definition. Economy with the increasing economic freedom, gradual integration, global marketplace, and members of the general global emerging market. So they come. This definition is giving a emerging market. What is it? So can you read please, and you see that slide clearly, and read it and ask me question if there. So all these definition, all these opinion now into one definition. Is it clear? And emerging market economy is a society in transition we discussed about. Then liberalization from dictatorship, increasing economic freedom, then global marketplace. So that all conditions satisfied, that country economy classified as emerging market. Common traits, so that you can read it. I am not going to explain. Okay. Some places, some other places they are coming. If the per capita income is 5,000, 10,000, then become global consumers and all these. So that just other this one. So you can use this as a data to decide your entry strategy. So this all I am not going to discuss for you to get some historical evolution of. I am not going to do that. What is Bin group? So you can read it. I'm not going to explain, but of course NAFTA we have changed. That I will discuss when it comes to that slide. Now NAFTA is renamed. Of course that also broken after this Donald Trump. So updated ones are not available yet. Okay. BRICS, yes, South Africa is one of the member now. It was a BRICS earlier, one group categorization. Brazil, Russia, India, China, South Africa is called BRICS. And even India, Sri Lanka is asked for a membership. I don't know whether they have been given or not, but we went as an observer last summit. Okay. So that is one of the categorization. Then Mint, Mexico, Indonesia, Nigeria, and Turkey. These 4 countries called Mint. So this is also one of the emerging market. So that if their needs and your product can match, then you can enter that market. So that's the idea of that. Okay. Mint and BRICS ideas are there. Okay. So the characteristics in a slide, so nothing to explain. So you can read it. Hope that slide has come clearly in your screen. Okay. What are some key features of BRICS economies? So it is there. I'm not going to explain for you to get idea. No need to memorize anything. Just a slide. Okay. Eastern Europe also you get something. Tigers, dragon. You all know that. Asian tigers and all. So you all know that. I don't want to explain that. Okay. Hong Kong, South Korea, Taiwan, Singapore are Asian tigers. So dragons they call. Okay. Japan is lagging behind and all. China, dual economy. Okay. So facts about to get idea. I have been talking throughout these lectures from start to end. So anyway, it's a huge development happening. So you can see in one page how India has developed. Okay, now 6th and they are going to be 3rd by 2031. And the first video, second video, you would have seen that. Okay, so there's nothing to explain. So what feature of the BRICS nations? High growth. That is, we talk about Brazil, Russia, India, China, South Africa. Okay, so medium growth, Russia. Of course, that after the Ukraine and Russia growth, and there is a big stuck in the Russian growth. So that is a problem. Okay, that is a medium growth. Low growth. India is slowed down recently. Okay. So emerging market examples are in the financial market. Okay. So that is only for information. I don't need to explain. Just you will get an idea. If you are a finance company, like I said, Langa LOLC India, LOLC entered in India, LOLC Finance India or something, India Finance. So now they are gone. Investor lenders, financial market borrowers. I have put some picture for you all. Canada relation with the others. Canada is also something. NAFTA, that is the North African Free Trade Agreement. Okay, so now it has been changed as I'll tell you what is it. International agencies are there. You all should know this about name, no exam purpose or anything, but just for knowledge. Organization for Economic Cooperation and Development. That is OECD. There are definitions that are available. When you read report, they say according to OECD. So then you know what is it. Organization for Economic Development Cooperation. They prepare report for multinational to enter other countries and motivate, and they do what you call due diligence. You know what you mean by due diligence for the economy, and they and you can buy from them. So if you are a company want to enter other countries, you can buy the report from them about the country that. And petroleum exporting company OPEC, you already learned in economics. So Asian companies grouping, Asian grouping. Okay. Now you can see here from 21 to 22 ASEAN 4.3 to 6.3. The huge growth. Okay. Different is 2.2 that. Okay. So that is just for example. No need to memorize. I'm just giving some ideas about the background of these countries, why they were calling or categorizing as emerging market. The ASEAN 5 countries are Indonesia, Thailand, Malaysia, Philippines, and Vietnam. They're called ASEAN 5. Okay, you all know that. Okay, if not, this is like there. I assume you all know, but if not, these are the ASEAN 5. Okay, so that is one. And here we talk about maybe 5-6 slides by nearly industrial countries. Okay, what are the characteristics of different nearly industrial countries? Okay, large population, sustainable and large growth of economy, shift from primary to industrial, so from agriculture to that we discussed. So I have put a slide in a picture just to get a summary like that. Okay, then strong political leadership to take India, almost 3 times the Narendra Modi party is there. So that shows a strong leadership, political leadership. Openness to globalization, they are now liberated. So we discussed about strong education system, and their universities are among the best in the world now. Okay, right? Part of the trading bloc, and they are BRICS part of the world, and they were doing it. Okay, so now you can see this slide will give how a country becoming nearly industrial country. Okay, so that you know the characteristics of nearly industrial. So I don't want to teach economics. I have given one slide. If anyone want a clarification, please ask me. Hope you all can see the slide clearly in your screen. Is it clear? Is showing in your slide clearly?
Yes.
Sorry? It's breaking. It's yes, no?
Yes, sir. Yes, sir.
Okay, thank you. So controversial countries also there. Economic growth, political progress, and development progress. China, not a democratic country yet. Okay, we discussed in the second slide, environment of international business we discussed. So you have to go back to that slide, and see China not a democracy. You know that. But one reason they have a 15 to 20 years plan, so that if you are an investor, you know there won't be much change in the policies. So then you know how to manage your risk. Nigeria interests have both tackled that corruption. Okay, so that you should know before entering this. This all I am giving some background. No need to remember anything, but just to get idea about these countries, even though they are named as emerging and potential investment location, but you should see these are the risks would arise when you become investor. So that is why democracy is not there. So you can't expect what you have done in Europe when you go to China. So you should be adaptable to that requirement and corruption. So without giving corruption, you may not be able to get the thing done. Okay. Turkey, China, human rights problem there, right? So some country comes and say companies, oh no, we need to have this and that. So you can't do business unless you adapt your philosophy. Okay. That they believe that strong economic growth can be achieved without political reform. So they are assuming without this they can, but China done it. So Western countries say these should be there, but still they are not struggling to develop. But China, without those also, because strict and little bit authoritative, of course, they are mixed economy, but with the authoritative, they have done it better than that one. Because you know, during the I think World Cup, I think, yeah, World Cup or something, yes. And you know, they used to eat beetles and spill over the world. And they put a huge penalty if they spill over, right? And they were able to clean Shanghai capital, right? So sometimes when Sri Lanka is not there, okay, 2 days you can't cross the road. Now they are saying we can't use headphone. After a month they forget, okay? And they are saying you can't use headphone when you are driving. Even I don't know about Bluetooth. You can't use the headphone when you are driving motorbike or car. Okay, so then and even you can't cross the road by using here in the this one. I don't know whether you have seen policies are catching. I have seen the PETA and all they are catching. Okay, so the accidents are happening because you don't know what is happening.